Hey everyone, I am Sharada Mani, Assistant Professor, Department of Commerce. Today we discussed about the insurance and risk management. In that, we discussed about the topic of regulatory framework of insurance. Okay, the regulatory framework of insurance is controlled by Insurance Regulatory and Development Authority of India. Okay, they set the grievance, the guidelines and rules. Okay, the regulatory framework refers to a structured set of guidelines, rules and standard that governs financial reporting, ensuring accuracy, transparency and comparability across the entries. These frameworks are designed to protect investors, promote financial stability and ensure market integrity. Okay, in that the framework comprise a set of laws, regulations. In that the primary objective, it includes ensuring the solvency of insurers, promoting competitions, maintaining the market stability and protecting policyholders from frauds or malpractices. In most of the countries, a central regulatory authority supervises are in insurance industry. Okay, in that the establishment of the guidelines for licensing the insurer or agent and brokers, having the sets of framework for setting the prices, claim management and investments. It ensures adhere to statutory obligations. It measures or essentials to safeguard the interests of policyholders and maintain the credibility of the industry. It is a significant component to regulatory framework is the financial regulations that ensures insurers maintain adequate reserves and capital to meet their obligations. Okay, it required company to meet the solvency margins, which act as a buffer against the unfrozen risk or claims. It is a further move to the investment guidelines are imposed to entire insurers to do not undertake the financial risks. Okay, it is a primary role to manage the frauds and funds entrusted by the policyholders. Okay, in the customer way of protection is another cornerstone. Okay, the insurer are required to provide clear, transparent and fair terms to in their policies. It is the most important thing to cover the policy holders. Okay, if they are not providing the correct reasons, means they mislead the advertisements, unfair consent terms or rejection of the claims. Okay, it dispute resolution mechanism such as ombudsman services or grievances redressal cell. Okay, in that grievances redressal cell has helped to the consumers to rectify the errors. Okay, in the regulatory framework is also understood the market conduct. Okay, it promote the ethical business practices by monitoring how the insurer interact with customer. Okay, it complete the market and manage their internal operations and anti-marketing laundry. It is called as AML. Okay, AML and CFT. These two are taking the intelligent financial activities. AML means anti-money laundering and CFT means combating the financial terrorism. Okay, in that the regulatory authorities are adopting to address the cyber security risks, data protections concerns and growth presence of digital platforms like websites, etc. Okay, in that in the global way organized by international associations insurance supervisor. It has worked to harmonize regulations and promotions best practices across the facilitating cross borders operations and ensuring stability in the global insurance market. This is the regulatory framework of insurance. The first one is insurance companies. The insurance companies must provide the correct way of policy terms. The next one is agent. Agent must explain their ways. Okay, ways, what are the rules they followed, how we can claim the claim, and how we maintain the insurance policy and how we get the loan is all concern about the agent. The next one is insurance advisory committee. It controls how the insurer and the agents are works. Okay, they set the rules and regulations and follow the agents and the insurers. The next one is insurance ambulances, and the next and traffic advisory committee. The both are working as working for the customer to protect their way. Okay, in that insurance borders are control the framework of that. The supervisor and the law accessories control or console the what they have meet up and what they are done. Okay, in the regulatory framework, it ensures the purpose of the financial stability and the fair practices and promotion of the policyholders while promoting growth and transparency in the insurance sectors. It is authorized by the overseen or by the national or regional borders like insurance regulatory and the monitor the regulate insurance activities. And the next one is it establishing the rules for the licensing of insurer, agent and brokers. And the next one is it guides the insurers on safe and prudent investment to protect policyholders funds and minimize the financial risks. The next one is enforce transparency, fair policy terms and grievances redressal mechanisms. In that market conduct, it monitors the ethical behavior of insurer in advertising, selling and managing politics, preventing fraud and the malpractices. In AML, implement measures to combat financial crimes and ensure compliances with anti-money laundering and counter-terrorism financial laws. The global coordination is collaborate with the international organization like International Association of the Insurance Supervisors to a harmonized regulation and facilitating cross-border operations. Its solvents requirements of the insurance companies must maintain a minimum level of capital and surplus to ensure that they have sufficient fund to pay the claims. These are the regulatory frames to control the insurance industry. Okay, thank you for watching.